Let's focus on the stock of this moment. Well, Cholamandalam Investment, the stock is buzzing. Abhishek told us earlier that these numbers are very, very good. The loan growth is at around 27-quarter high. The asset quality has improved, while they've also clocked the highest ever operating profit. Mr. Arul Selvan, president of the company, joins us on the show. Hi, sir. Morning, and congratulations on a solid showing. You know, the street has given it a thumbs up, despite you giving a bit of a cheat sheet even earlier. So it's come as a pleasant surprise. Give us a couple of numbers first. Let's get that out of the way. The AUM now has clocked more than 1 lakh crore. What kind of a growth can you see in terms of AUM for this year? And out of that AUM, currently new business I think is around 9%. Where does that number head to in FY24?
AUM growth should be, in the range of around 20%, 20-25%. I would put it there, because the base is larger now, and which we need to work on this year's growth. The new businesses over period will be in the range of around 15% share of the overall AUM. This is again the similar numbers which we spoke earlier.
20 to 22% AUM growth. I mean, I think last in February when you were with us, you'd given us an estimate of between 22 to 23%. So round about there.
Yeah.
Mr. Selvan, good morning. Could you talk to us about these individual businesses? Where are you seeing the maximum traction? I mean, across the board, when we look at vehicle finance disbursements growth of 56%, I'm talking about full year numbers here. Loan against property, home loans, new businesses.
Thank you.
Where are you seeing the maximum traction? What will lead growth in FY24?
See, vehicle finance will have still, in an absolute terms, it will have the largest growth, because it's got a good base, and it has got we have spread across geography, and over the whole of India we have this spread, and it has got multiple sub-products under it, so it can sustain, differential growth rates across their sub-products. The LAP and home loan are areas where we have now spreading our wings on other parts of the country, where our focus had been earlier in the case of LAP, south and north, and now we are spreading into west and east. And the home loan we had been doing more of south and west, and now we are spreading into north and east. So these again, from a geographical expansion perspective, would bring in more traction on the disbursements. But since the base is low, they will, in absolute terms, they will be lower than the vehicle finance, but in percentage terms, they will be higher. The new businesses, of course, have got very smaller base, so their growth will look reasonably faster as percentage terms, but again, from an absolute value, they will be short of the vehicle finance numbers. So I would overall put, that is the whole point of the strategy we have adopted, to have multiple products so that we could sustain the overall growth irrespective of cycles and different product segments.
Sure, got that. I want to talk a little in detail about the new business segments, but before that, would we see your spreads improve as you raise rates going ahead? Are there more levers to improve your margins, your net interest margins as well?
So the point is, in vehicle finance, where we have a fixed rate book, there you would have seen that the NIMs have come down, whereas in the LAP and the HL and the other products, you would have seen the rates improve, primarily because these products had been repriced with regard to their existing book also. But in the mix of the vehicle finance, as we move on with newer disbursements happening at higher rates, these spreads would improve. So as the mix of the old product, that is a pre-price increase products versus the post-price increase product changes, you will see NIM improvements happening. So this is under the assumption that there are no further price increases by RBI and in the general market.
So in terms of numbers, if you can help us with them, I think you're sitting at NIMs of around 7.8%. Is it fair to assume that as your new businesses grow, there could be some contraction in your NIMs in the initial few quarters and then expansion? I mean, what kind of a range are we looking at?
No, the new businesses are actually NIM accretive because their yields are higher. So they will show a higher NIM, but their OPEX will also be slightly higher. So you will see a trend where NIMs will improve, but you will also have situation of OPEX slightly going higher. But overall, as we always have maintained, our ROTA target would remain on a profit before tax ROTA of 3.5% plus. And I think that we stand committed to.
All right. And NIMs will be around 7%, 7.5% or?
Yes, actually, if you see over the cycles, we have always been in the 7+ range. The aberration actually had been the COVID years where we crossed the 8%.
Okay, so for us to maintain a broad number, we've got the AUM growth should be in the vicinity of around 7 to 7.5%, or would you want to give it at around 7.5%?
AUM growth or?
No, the NIMs. The AUM growth we have got, sir. We have got the AUM growth number. We just wanted some clarity on the NIMs number, if you could help us out. 7 to 7.5%?
Range of 7 to 7.5%. Yeah, I think you should comfortably take it.
We have got that. All right. Sir, if you could give us a few more details. The asset quality has come in, at lower levels. Gross NPAs as well have reduced. Could you tell us how is the asset quality likely to look going ahead? Point number one. And point number two, the cost to income ratio, well, that's come in at its lowest in the last 5 quarters. But as you said, now you're looking at new businesses. So where do you see this number stabilize at?
So the asset quality, had sort of deteriorated during the COVID too, and post that quarter on quarter we have been bringing it down, and we have come to the pre-COVID levels. If no other new events happen, I think it will go through the same cycle as we used to have experience pre-COVID. That is, you'll have the first half showing a slightly deteriorating or flattish or a plateauing asset quality numbers, and then improvements in the second half, because these are quarters where the economic activities is slightly lower, and then in this third and fourth quarter, where especially since our focus is more on rural, etc., harvesting, etc., comes in play. So we will see the potential of the customers, strengthening in the third and fourth quarter, which will result in better asset quality. So you will come to those trend levels as we move on into a normal periods as we used to experience pre-COVID.
Mr. Selvan, just one point on auto. So we got monthly auto sales numbers, right? It's not exactly a very exciting picture out there overall. I mean, it's in two-wheelers, even four-wheelers for that matter. We got numbers for last month. But that's on one side. On the other side, there are many who expect that interest rates perhaps will be, some expect a full 100 basis point worth of rate cuts in the second half of this year by the Reserve Bank. About 55% of your borrowing comes from sort of banks. What is how is this going to play out if sales remain tepid on the vehicle side and interest rates come off a little bit? What will you be able to do in terms of margins, and how will you balance growth and margins?
See, the point of our diversification is to remove our dependence on vehicle finance as a portfolio, where it used to be, more than 75% plus. And I think that strategy will play out, and that's the point of, ability to build strength to ride cycles. So this will happen as we move on with other products also scaling up. So our dependence on vehicle finance as an overall product will come down. So I think we should be able to do this. And even within vehicle finance, we have all the product range covered. So it's not like, the car sale coming down or heavy commercial vehicle sales coming down would impact us. Yes, it will have an impact, but I think that's the strength of Chola, that we have diversified ourselves, progressively and in a very, structured way, that we are able to ride these cycles, and that's been, we have been experiencing that. On the interest rate cut, I don't see that.
Yeah. Sorry, just one follow-up on this vehicle financing, because you've tracked this space and you have your ear to the ground. There is some talk that in the commercial vehicle segment, there is a little bit of a slowdown that we are seeing, and the best of the upcycle is now behind us. Is that a fair assumption? I mean, you cater to the commercial vehicle segment, you cater to construction equipment as well. But in the CV space particularly, are you noticing signs of growth slowdown?
So the growth increase happened with regard to customer segments which are in the fleet operators. So we actually don't participate there. Actually, the growth which you are seeing here has happened without participating in that segment, and our focus has been more on the SRTO segment. And you have also seen that our used business has gone up in the vehicle finance. We have also scaled up on tractors, construction equipment, and other parts of the vehicle finance business. So this has helped us to sustain the growth in this segment, and I think we have that ability to move from product to product to sustain this growth, what we are targeting to achieve. So we don't
Sure.
see any large scale challenges. Of course, we cannot be too far away from the industry. If the industry goes through a large degrowth, yes, we will also happen to have to experience that.
Okay, we'll ask you the rate question next time you're on. We're out of time. Mr. Selvan, congratulations once again on a fantastic set of earnings. And as your, I think, earnings presentation says, 20% CAGR, right? I mean, so it's been an absolute rocker of a journey, and the stock's at a new high very handsomely in a market which is not doing all that much. Thank you very much. So that's Mr. Selvan at Chola Finance with detail. So 25 points, by the way, on the Nifty. We're at about, what, 18,113.